All right, how much Ethereum should you own? Well, that depends on what your goal is. But as we head into 2020, as Ethereum switches from proof of work to proof of stake, meaning that if you hold Ethereum, you can start earning some passive income. You can start earning some passive Ethereum by staking, by hodling and staking. So today, I want this to be the de facto video that you can share, that you can learn from, that you can return to. Find out how much Ethereum is right for you. Welcome back, everybody, to Altcoin Daily, where you subscribe for a video on cryptocurrency every day. My name's Austin, and like always, let's jump in. The next major iteration of Ethereum, dubbed Ethereum 2.0, which is coming in 2020, will be based on proof of stake consensus protocol. This means that transactions on the blockchain will be processed and validated by you, potentially by users who stake their wealth as opposed to miners who expend energy. And if you stake, you get rewarded annually because people who stake on Ethereum's proof of stake network known as validators are rewarded by earning annualized interest on their locked in Ether. At present, if you want to stake, the minimum amount of Ether required to become a validator is 32 Ethereum, which right now, with one Ethereum currently trading at $184, well, that's going to cost you a pretty penny. But you know what? You knew this. Most other cryptocurrency channels will talk about 32 Ethereum. That's pretty common knowledge by now. But this channel is going to dig a little deeper, and I not only want to talk about return on your investment, but also what are the, it depends on how much Ethereum is staked. It depends on how much you hold. We're going to get into all this. And stay tuned to the middle of this video because I want to break down how whales manipulate the crypto market in general. Manipulate you. This is a chart that most whales probably don't want you to see. I want to break this down for the common cryptocurrency hodler. So we'll get to that. But first, how many Ethereum and what will be your ROI if you stake? Well, Colin Myers, head of global product strategy at Consensus, the Brooklyn-based Ethereum venture studio, said validators with 32 Ethereum can expect to earn between 4.6% and 10.3% interest annually at the launch of Ethereum's 2.0 network. So 10% annual interest on top of your hodl position, not bad. And to put this in perspective, if you stake 32 ETH and say you invested about $5,000 to buy those 32 ETH today, after 1 year, 10% interest, that would be $5,500. Not too shabby. But wait, it's not that easy. Because according to Myers' calculations, and again, this channel goes this extra step, according to him, validators on Ethereum 2.0 who stake 32 Ethereum have the potential to earn 10% interest annually, given the assumption the network launches with 2 million Ethereum staked. So the more Ethereum that is staked initially, the less interest you'll earn, but the less amount of Ethereum that's staked, the more interest you'll earn. I found this chart that I think really sums up how much you can expect to make from staking Ethereum. Check this out. If you only have 1 million Ethereum validating, then your annual max interest will be 18%. Now that 10% is what the Ethereum team expects, and they're saying between 2 million and 3 million Ethereum validating. So this is really what they're expecting initially, but say 10 million or 134 million Ethereum validating comes on the network, then your annual interest will be 1.56%, which again, better than nothing. And the more people that stake, the more secure the network will be as a whole. As I get more information, I'll keep you updated, so make sure you subscribe. You do not want to miss one of our daily videos. And if you have a specific question, because 2020 is coming up in 2 months, if you have a specific question about Ethereum, comment down below. Either the community can answer or I'll answer. But like always, next piece of information, and this was really interesting to me. Be sure to stick around to the very end of today's video. I want to play you a very special 90-second clip. I think you're going to get value from it. Yes, so we'll get to that. But according to technical analyst, Bitcoin cryptocurrency investor Jacob Canfield, for those not familiar with whale manipulation, this is a good guide on what exactly to look for, because there are typically 6 stages. Number 1, suppression. Number 2, range bound. Number 3, a test pump. Number 4, a sell-off. Number 5, this is the big one, the price pump. And then what the whales do, they exit. Now, I'm going to spend a little bit more time on this because I think this is information that deserves a little bit more time. Stage 1, suppression, which is this part of the chart right here, right before this blue line. And that's when whales manipulate and suppress the price to take out long-term hodlers, people like you, people like me, create a lot of fear, uncertainty, doubt, which leads to capitulation and takes us into stage 2. And stage 2 is when those whales keep the price ranging in a certain area so they can build their own strong position using limit buys. And 3 to 6 months, this also hides their intent in the volume monitors as well. So they're playing the long game. Which brings us into stage 3, test pump. Maybe you recognize something like this. And this is specifically a market buy test pump, meaning they're going to buy on the market to manipulate that price up, to excite people so they build a position, and then they're going to suppress that price, push it down, and get out even more weak hands. Stage 4 is where the whales really get tricky. Stage 4 is a high volume market sell order, so they're going to manipulate the price down to take out stop losses, which is a high volume market sell order, with the goal to take out stop losses below and liquidity below the prior swing low and have a V bottom and a reversal so they can buy back in at the cheapest. Stage 5 is create a hell of a pump, create FOMO, and stage 6 is sell, and then those whales start the process all over again. I really appreciate, we know this, but I really appreciate the illustration from Jacob Canfield. And if you notice, most of these steps, the whales were selling rather than buying. And the whales can afford to sell off some of their tokens at a loss and buy into them because they know they're going to pump the price much higher. The goal of those whales is always to gain market share of the token. They will also use news as a catalyst to offload their bags and spark the price. This, for me, is why I'm more of a long-term hodler than a swing trader, but just be wary. I'm going to link this down in the description. Check it out for yourself. Really interesting stuff. And last piece of news, China's digital cryptocurrency will be gold-backed, according to Max Keiser. And what Max is about to tell you, that according to his sources, China is about to go on record and admit they own tons and tons more gold in their reserves than they have ever let on. And they're about to drop the trapdoor on the world economies by saying to the world, we own this much gold, our economy is stronger, we're better than the US dollar. And then, according to Max, they're about to mention that China's digital cryptocurrency will be backed by that gold. Check this out.
And what's happening is that China is getting ready to open the trap door on the US dollar. Here's what I'm hearing, Daniela. China is about to announce that they, in fact, have not just under 2,000 tons of gold, but closer to 20,000 tons of gold on a very aggressive move to put the final nail into the US dollar.
What's your source for that?
As you know, we do our show that's broadcast globally, and we have a lot of contacts all over Asia and in Eurasia and naturally in Russia. And the feeling is that this is the time for China to now step out and put to rest this idea of censoring their global trade,
right,
with the U.S. censoring SWIFT and other things that they do to curtail China and other countries, because China's making their big move, the big move for the 21st century. They're going to pull the trapdoor. And let me just add that they're also, as has been reported by the media, rolling out a cryptocurrency. A lot of the details have not been divulged. I can tell you that that cryptocurrency China's rolling out will be backed by gold. It's a two-prong announcement. Number one, China's got 20,000 tons of gold. Number two, we're rolling out a crypto coin backed by gold, and the dollar is toast. The dollar's going, like every other paper money in history, to zero. And you say, where's gold going? Is it going to 5,000, to 10,000? It doesn't matter. In dollar terms, gold is going to infinity. In dollar terms, Bitcoin is going to infinity because the dollar is going to zero, like every piece of garbage fiat money before it.
Okay, wow. Okay, now I have a lot of questions.
All right. What do you think? Crazy old coot spouting nonsense, or Max Keiser, a man who has been involved in Bitcoin since at least 2011, that has some inside knowledge? Time will tell. That is the video for today. My name's Austin. Hope you're having a great weekend. Like always, I'll see you tomorrow.